Hello and welcome to yet another session of Reliance General Insurance with you for you webinar for MSMEs powered by Financial Express Digital. I'm Markets Editor Shalin Agrawal. This session is about empowering MSMEs in India, harnessing finance for growth and expanding insurance opportunities. In this session, we'll discuss how finance for small businesses could be leveraged to expand insurance opportunities. To discuss this, we have with us Amitabh Gupta. He's the Chief Underwriting Officer at Reliance General Insurance. Amitabh Gupta is a insurance industry veteran. Amitabh Gupta is a general insurance industry veteran with close to 30 years of experience. He is skilled in property and casualty insurance and claims management and now heads underwriting at Reliance General Insurance. He has been associated with the company since 2002. Next, we have Dhawan Shah. He is the country head SME banking at Yes Bank. Dhawan Shah has over 27 years of work experience in banking and finance. He has experience across functions, including MSME lending, trade finance, sales and product management, retail banking strategy, transaction banking, savings and current accounts, channel management, digital strategy, and data analytics. Dhawan, Amitabh, thank you so much for joining us today and welcome.
Thank you. Thank you, Shalin.
Dhawan, we'll start with you. Since in your business, you interact with a lot of clients from MSMEs who need finance and insurance. What are the challenges that small businesses nowadays face in accessing finance and insurance?
So Shalin, I think some of the challenges are common possibly for both the insurance and the banking industry. Largely, I would say the lack of awareness of how to avail or possibly why to avail, because many times I think it's only the part of the mandatory insurance is what customers take, while there are a lot of risks which sort of stays open. The second issue that we see as a challenge is in terms of the availability of adequate data from the MSME perspective for the banks or the insurance companies to be able to take the underwriting call, be it in terms of the finance or be it in terms of the insurance that has to be covered. Third, at times, the lack of collateral, because I think large part of the business model on the MSME finance is still backed by the asset or the collateral, and that has been the predominant model of underwriting and lending to the MSME segment. So we do get a lot of cases when you actually look at the more on the micro segment. I think the gap in terms of availability of the collateral versus the expectation, that possibly is one of the biggest challenge. Fourth, I would say the sometimes the margins in the business are so low when some of the MSMEs are doing business that at times they keep themselves underinsured, right? So that challenge is to be able to look at the probability of something going wrong and hence getting covered through the insurance versus the margins, and a lot of them possibly take a call that I would rather remain uninsured than taking possibly a call on that, largely coming out of the margin pressure that we see. These are broadly the challenges that we see from the customer perspective. From the institution perspective, it's obviously the availability of data. While a lot has improved post GST and a lot of APIs now available in terms of data from GST, ITR, and the Bureau, but still I would say almost 70% of the MSMEs are largely on the micro small enterprises are still not part of the GST network, right? And to that extent, the credibility of data that you get is always a challenge to be able to take a call on the customer. So I think these are primarily the challenges that we see on the MSME front.
Amitabh, how is financing and insurance linked with each other, especially in context of MSME?
Yeah, I think it's very important. See, as I understand, most of the SMEs are in the unorganized sector in our country. So because of that, a lot of data that insurance companies need for insurance purpose that is not properly captured by them in their books. So they operate in maybe some cash market or maybe some other kinds of situations where proper data records are not available. I think if finance comes in, all these things will get formalized. So proper data would be available, which is extremely necessary for insurance companies to be able to provide satisfactory services to the customers. So I think that is one of the reasons why certain SMEs in the unorganized sectors have not been able to avail of insurance benefits.
Dhawan, a lot of MSMEs, if I understand it correctly, and please correct me if I'm wrong, these are family-run businesses. Do they actually want to access finance from institutional channels such as banks on a regular basis? Or do they primarily rely on their business and retained earnings?
No, absolutely. I think even if they are family-run businesses, to the extent of the promoter margin, which is the healthy contribution, which has to be is the skin in the game, right? Which has to come by way of promoter margin. But I don't think they are averse to taking the finance from the banks or the other institutions. So maybe some minuscule number here and there. From a growth perspective, unless you also bring the institution on board, there is a limit up to which you will keep investing yourself into the business, right? So maybe at a smaller stage or the early stage, I think it would probably start with your own funding. But as the business grows, the cash flows are visible. Yes, obviously the most MSME, even if they are family run or along with friends and families together, would eventually go for financing from the institutions.
Sure. And Amitabh, if MSMEs are included more and more in finance channels, such as Dhawan just mentioned, how will that contribute in increasing the insurance penetration? One is you mentioned about the lack of data, but is that the only thing that is missing?
No, I think, see, you should understand while India has a lot of agents, rather insurance companies have a lot of agents, it is, I think the SME, total number of SMEs in our country is about 6 crores. Practically, it is impossible to access each and one directly by the insurer. So if the financial institutions step in, I think we can access to, we will have access to SMEs in bulk. So we can design specific schemes for them so that they are able to avail standardized covers of insurance, and I think we'll be able to access them more easily rather than on a case-to-case or individual basis. So I think finance is extremely important in terms of the fact that it enables easier access to the insurance companies to the SMEs. So I think that is very important.
Dhawan, for my quick understanding before we move forward, today we are discussing the challenges of insurance penetration for MSMEs, but in the same breath, is financing also a challenge, or is financing more or less taken care of and it's only insurance which is the nagging bit?
Interestingly, I would say both are actually, or both will go hand in hand. The more the understanding of the insurance, because on a holistic level, right, when you look at insurance, there are variety of instances in the probability of default, which could be covered through the credit insurance, or the stock insurance, or the fire insurance, or some of the simpler side, like the currency risk, which could be covered through the hedging, right? So there are various forms of how do you cover the risk arising out of the whole line of activities that you are into. And higher the insurance, the probability of the underwriting comfort from a credit perspective on the bank side or the institution side will also be higher. Conversely, I agree with Amitabh. The more the depth of the finance penetration happening in the MSME would automatically lead to the inclusion of insurance as well, because in most cases, the basic insurance on the property, equipments, and the fire will definitely get covered as part of the financing requirements. So to quite an extent, I think it will go hand in hand. But definitely the depth to be created on the financing side would definitely lead to a better insurance penetration. And my sense is it's not just from the number perspective, but the more the depth of the market is created, the ability of the insurance companies also to then innovate the products. Higher the volume, better will be the price discovery, which will bring down the cost for MSMEs also, right? So better the SME penetration right up to the length and breadth of the micro to small to medium enterprises. I think better will be the coverage of variety of insurance that we will see in the country.
And financing is where channel partners such as yourselves come into the picture to help develop MSMEs ecosystem in India.
That's right. So the challenges will continue, right? To the extent of the data availability, quality of some of the items that we covered. I think that's the market forces that will determine how it moves from here on. But increasingly, yes, I think all the institutions are looking at how do we get innovative in terms of being able to do more financing across the micro and small enterprises. A lot of scope for innovations and relook at how do we do it. Interestingly, I was realizing when Amita was speaking that the two biggest players in the country in terms of insurance as an industry and finance as an industry, while a lot of data work has happened with the GST and IT and other network, but somewhere the data between the insurance and banking is also a good area to look at. As to how much data with customer consent can be shared, because that's an important element of decision making, which can also help in terms of increasing the financing capabilities.
Sure. And Amitabh, is there any measure, is there any number which can be put forth to explain or to measure how much of penetration of insurance is there in MSME sector in India?
Well, I think we are just touching the tip of the iceberg. In terms of penetration, I think not more than 10% of the SMEs are covered within the country. See, government had started the Udyam scheme about 2 years back, and I think as of now, only 25% of the SMEs so far have registered themselves in Udyam. So a lot of SMEs in the unorganized sector, unfortunately, they either don't have the awareness or they find it difficult to avail insurance. I'll give you a small example. In my earlier part of career, when I was working in an operative office, so an agent approached me ki bhai, this shop has goods worth maybe 50 lakhs, but in his book he shows only 10 lakhs. Can you give cover of 50 lakhs? Now that kind of thing is not possible for insurers to do. It has to be 50 lakhs and it has to be on the book of records. So these kind of challenges come up, and unfortunately then such risks fall out of the insurance. So I think there's a lot of scope. Insurance and finance sector are both trying to do it, but I think there's a lot of distance yet to be covered in this.
Have the things changed a little bit after GST?
Yeah, it has changed. A lot of formal economy has come in. I think now the data is more reliable. It can be cross-checked online also. It has helped us in settling claims also. A lot of data we can obtain online. Earlier, it was more of a judgment. See, once a fire takes place, a lot of SMEs maintain their data within the business premises. So the data also gets destroyed. Now, GST has come to help us in how to get data of the past 1 year or so, how many purchases he has made, how many sales he has made. So thereby, it is easier for the insurance company to assess the loss. So in those terms, I think GST has helped us a lot.
Both of you spoke about awareness amid MSMEs for insurance. And Amitabh, you said that hardly 10% of MSMEs are insured. So would you like to take this opportunity to very briefly explain the benefits and relevance of insurance for small businesses, be it in terms of risk coverage, be it in terms of business continuity?
Yeah, I think to start with, the most easily visible insurance is fire insurance, about which most of the people know. Now, fire insurance doesn't cover just fire. In fire, it also covers flood, earthquake, and if you want to avail terrorism covers also. So fire, in fact, it's a traditional term, but now it is more of a misnomer. Now it's a package policy covering so many aspects of the policy. IRDA 2 years back came out with two specific products, Laghu and Sukshma. Sukshma is for those SME customers who have a insurable asset base of up to 5 crore rupees. So they take Sukshma cover, and 5 to 50 crores customers can take a Laghu policy. So these are specific policies targeted at these kind of customers. They are very user friendly. In the standard fire perils earlier fire policy, there used to be a lot of add-ons. So a customer had to be aware of those add-ons to avail those add-ons. But what has happened in this Laghu and Sukshma policy, all these add-ons have been inbuilt. So there's no chance of mis-selling. It has been priced adequately, and insurance company has to mandatorily sell all these policies with the add-ons. So it is very helpful to the customers. So these are one set of covers which are given. Apart from, yeah.
Why not? Why not let the customer choose? Why built in? Why built in on the add-on?
What happens see, there may be about 5 or 6 lakh agents in our country selling insurance products. So they have different levels of understanding. So those who are more aware, mostly in larger cities or metros, they may be able to explain the customers all the details. But if you go to the hinterland class 2 cities, maybe they are not so aware. So sometimes the customers used to miss out on the insurance. Let me tell you, in the earlier policy, earthquake cover was optional. So if a agent is not aware, or if the customer is not aware, he'll feel he's taken a fire policy. But earthquake cover has to be opted specifically. So now it has been inbuilt into the policy and it is a part of the policy. So these kind of benefits have been made mandatory so that the customer is uh, reasonably sure that he has the maximum available cover in the country. So that is why I think, but apart from that, let me tell you, there are certain package policies also which are sold by the insurance companies. Now, package policy would, in addition to fire, cover other things like burglary, maybe the employer's liability for the workers working in the SME, the personal accident. For example, if a shop has a deep freezer, it has a compressor which is susceptible to breakdown. So breakdown can also be covered. So all these different kind of covers are available in the package policy. I think most of the insurance companies are giving this package policies. So the advantage is that these covers are customizable. So one can select only fire burglary, one can select fire plus burglary plus breakdown plus workers plus personal accident plus third party liability also. So these are certain options created within the package policy. And the second advantage of taking package policy is in, of course, in terms of discount, which appeals to the customers. So the more sections you take, the higher discount you get. So these kind of covers are also available. And as Dhaval pointed out, now trade credit policy has also been made quite customer friendly. Earlier there were a lot of restrictions. So I think 1.5 years back, IRDA, the insurance regulator, revised the guidelines. Now a lot of covers are available, including discounting of outstanding credits. So these benefits are also available to sellers both for domestic market as well as for export market. So in case a customer, or rather a seller, has sold a products on credit and he is not able to get his recovery from the recoverables, the insurance steps in and all the recovery which is due to him gets paid, provided he's not paid to the for a period of 6 months, and then the insurance company proceeds for recovery. So these kind of credit insurances are also now available in the market. So a lot of products are available across the board.
All these add-ons, what does it do to the cost of a business trying to avail insurance? In any case, these small businesses are largely in traditional industries. Is there any measure again? How much of margin can an insurance cover take where you would be comfortable in calling it an adequately covered company?
All the assets being covered have to be mandatorily covered under fire insurance. Since fire forms the base major portfolio, I'm talking about fire. So if I mean an SME has stocks of about 1 crore, he should cover for a value of 1 crore. If he covers for maybe 70 crores, that is called as under insurance. So if he covers 70 lakhs against 1 crore, that means only 70% is covered. So in case of a claim of 10 lakhs, he will get only 70% of the claim, that is 7 lakhs. So that is because of the deduction of under insurance. So that is why we always recommend that you cover the entire value available. So now the price, talking about the price part. So actually after these Laghu and Sukshma products were introduced by IRD, the prices have gone down substantially as compared to earlier times. Let me give you an example. An average, I mean, some shop or some small business having a stock of maybe around 1 crore rupees can avail insurance for a year for maybe 4,000, 5,000 rupees for the entire set of fire perils, including earthquake and terrorism. So I think that's not a very big value, whereby you can transfer the risk to the insurance and ensure the continuity of your business.
In terms of margin number, is there any number available that how much of the business margin does insurance cover take away?
Margin, I'm not sure. What do you mean by margin?
The operating margin. From the operating margin, how much is an adequate insurance coverage? How much can that take away from operating margin?
See, as I said, full value has to be insured. Insurance company does an actuarial analysis of the entire risk book it has and arrives at particular rates. So within that rate, insurance builds their profit margins also. So there is no extra profit margin. Now, if the risk is inadequately priced, if the insurance company has higher exposures than what it is charging, so it will end up in losses. So each insurance company has to devise its own pricing mechanism to ensure that even despite losses, for example, recently we had a cyclone. We also got a number of claims in Rajasthan, and I'm sure other insurers have also got it. So all these claims put together should it should be possible for the insurance company to honor all these claims
Sure.
and still have some bit of reserve to take care of future losses. So that is how the pricing is done by each insurance company. And I think these are very finely priced. Let me assure you, there are not huge margins as far as SME businesses are concerned, because it is a matter of concern for insurance companies also that it's a uh, activity which is being promoted by government also, financial institutions also, and the insurance companies are also chipping in to play their part.
Sure. While we wait for Dhawan to rejoin, we'll move ahead with other questions. Yeah, what are the specific gaps? We have spoken about awareness and we've spoken about the basic insurance covers for small businesses. But are there any specific products, any specific lines of insurance, any specific gaps that you can identify and use this platform to educate small businesses that this is where they should also look at?
Yes, I would like one particular thing which customers should be aware of, that they should not insure only to the extent that they have a outstanding loan. For example, if they are taken a loan of 1 crore rupees and the outstanding is only 30 lakh rupees, so they should not be looking at insuring only 30 lakh rupees, because as I had mentioned earlier, the under insurance would start playing. So they should ensure that they should take the full value of assets being covered. If it's a building, what is the construction cost? If it's the machinery, what is the purchase cost? And if it's stocks that they are covering, what is the manufacturing cost? So the entire cost should be covered. So there's sometimes a gap. People feel that since bank finance has been taken, so only the outstanding part needs to be covered. So now this is a big misunderstanding sometimes in the minds of the customer. So that they should do. Apart from standard fire cover, insurance company also cover business interruption, which we also call loss of profit. So each business works to generate some profit. Now, while a fire takes place, of course, the assets get damaged and they can be covered under the insurance policy, and the customer can avail of the benefits. But what about the business which he has lost? What about the income which he has lost? So there's a separate business interruption or fire loss of profit cover which he should avail to cover the profit part. So for example, in a business, if he's generating maybe 50 lakhs of profit per month, and in a year he's generating maybe 12 into 5, that is 6 crores of profit. So he can take an insurance of 6 crores, so that if the business gets affected and he's not able to start business for a period of 1 year, he will get the entire 6 crore. Supposing he starts a business in 3 months, because the fire was not so severe, he's able to start the business in 3 months, so that would make the claim of 1.5 crores. So that is how it is done on proportionate basis. So I think business interruption cover is also very important, which a customer should take.
So the business interruption or the profit interruption cover comes into play only in terms of accidents or disasters, right?
Yeah.
So it's not a bad business decisions cover.
No, absolutely not. That is a business risk that is not covered. Yeah.
Sure. What could be the other strategies or what could be the other new age platforms which can be introduced to increase the insurance penetration and awareness? So we will not talk henceforth. We will not talk about penetration alone. We will talk about awareness as well.
Yeah, see, most of the insurance company has various ways of accessing customer through their websites or through their agents. So far, what has happened, most of these websites are in English. So what we are trying to do, we are trying to create various websites in vernaculars also, because if you go to Tamil Nadu maybe or maybe Kerala, they may not be so conversant in English. Similarly, if you go to the Hindi belt, for example Rajasthan or UP, they may not be conversant with Hindi also. So now, of course, India has a large number of languages, so everything cannot be built in. But in the key areas, what we are trying to do, we are trying to approach our customers through these vernacular language websites. So it's easier for them to take insurance. So that is one of the initiatives that we are trying to take and trying to work these things out. So I think this is one of the ways. Apart from that, we have thousands of agents. I'm sure each insurance company has. We have about 30,000 insurance agents. We have tie-ups with a lot of financial institutions, banks. So there are various methods through which we try to reach a customer base of SMEs and try to provide them insurance.
Sure. Dhawan, I was talking to Amitabh about several other things as well. Cost of insurance and the impact on margins, and then new channels of promotion. One thing that we had spoken about to Amitabh was insurance penetration. I would ask a similar question to you. What is the state of finance penetration for MSMEs, or what is the status of accessibility and affordability for finance for small businesses?
So broadly, I think from a expected pool of about 6 crore plus MSMEs in the country, I think what is there in the formal channel is roughly about 25 to 30% thereof, right? So when you look at the Udyam data or the GST data, somewhere about 1.4, 1.5 crore are the entities which are formally available for somebody to access and see what is happening. But almost 70% of the SMEs are not in these formal channels, right? So that's one problem segment of they finding it difficult to access finance because there is nothing much available in terms of data for somebody to go and underwrite these segments of customers. And invariably, then they end up either going to the local lenders or the friends and families, which obviously comes at a very high cost, which increases the cost of doing business and probability of default. So this second problem that we see is in terms of the awareness of the availability. So while the finance availability is there across the institutions, both in BFC and the banking as an industry, and there are a good amount of government schemes that we have seen coming and helping some of the MSMEs to be able to get a better finance versus what is available. But unless you see the cleaner balance sheet or the data which is clean, because a lot of data is now available, like at least from a bureau, ITR, GST perspective, there's a lot of triangulation of the data which happens. So when you see the credit discipline of the promoters or the entities, repayment track record, and not getting very aggressive in terms of leverage, right? Because that's the issue sometimes that we see in the MSMEs. I think as long as that is there, those set of customers are able to get a better bargain, both in terms of the money available to them or the amount of funding that they need, plus at the price point at which they need. There are options available on the transactional finances. Models have evolved on the supply chain and the transactional financing. But somewhere I think the ability to put the data on the table, or like Amitabh said earlier, the information or the data being available in the books rather than just being on the physical stock somewhere, is remaining a challenging area for large part of MSMEs. So more and more the information available, the transparency of data or the information coming from a third-party sources would sort of give much better comfort to the institutions to be able to give a better credit and in better terms as well as to the MSMEs. Otherwise, you'll end up going for a unsecured, high leverage. Sometimes even people availing the finance on a personal account rather than an entity account, right? So while you might not see on the books of the entity, but eventually as a promoter or a partner, you will take a personal loan and sort of put that money into the businesses. I think those are the risk area that we see in terms of financing.
That's a very interesting point that you made. Promoters taking loans on their personal account. So as a financier yourself, how do you approach such situations where you can see clearly that the promoter has a lot of debt or some amount of debt, but the books of the entity are not leveraged that much? How do you approach that kind of situation?
So generally, Shalin, in terms of the assessment, we always look at the data from both perspectives, not just the entity's balance sheet or the financial data. But we also look at the data from bureau as well as obtained from the promoters as to how much is the personal borrowing and the credit rating, right? As long as it is within the overall leverage range, we don't see an issue because it will always be there, because as a bank, you will also insist that some form of equity or quasi-equity coming from the promoters into the business, which could come in the form of the surplus money they have, or at times it could be short-term loans that they would be taking. So as long as it is the ability to manage business, even with that unsecured debt or the personal debt is there, we don't see that as a challenge. It's just that the problem comes post lending. If you start availing the finance outside the bank's knowledge, I think that's where the leverage issues start coming into play.
We'll talk about those issues in some other discussion in details.
Sure.
For now, you mentioned that about 70% of the small businesses are outside the formal channels. Now, honestly, how many of these 70% are actually seeking formal finance but are not able to, vis-a-vis those who are not even interested in the formal channel of finance?
Shalim, my view is most MSMEs would be seeking finance, because when you look at the segments into this, it will be typically your retailers, small-time service providers, and the emerging gig economy, right? So a lot of people have started doing businesses on Instagram, and also there is a class of the business people evolving, which want to do from small office, home office kind of a business model. In terms of scale up, at some point in time, there is a limit up to which anybody would put their own money into the business. And if the aspiration is to scale and grow, you will always need some form of finance. It could be short term, it could be long term, it could be pure working capital, or it could be term loan from a pure expansion of capacity perspective. So my sense is at least 60 to 70% of that lot will always be looking for a finance in one form or the other.
So there is still a lot of market for you to capture.
Absolutely.
We'll stick with you for one more minute. What we have spoken about, Amitabh spoke about recent government initiatives. What else can the government do to actively promote SME and finance options and encourage the development of small businesses?
So there are a couple of areas that we have seen coming from government. There has been traditionally the credit guarantee scheme, which has been there in the place. There are a lot of initiatives lately. If you see, actually starting from COVID, it was thanks to ECLGS that most of the SMEs in the business had been able to actually survive, do better, and come back to the business model. Lately, government has increased the coverage for CGTMSE as well as the ECGC cover for exporters as well. So there are schemes that we see are there in the market, but largely availed by little better off segments in terms of small to medium enterprises. I think for micro enterprises which are not sort of into the formal economy in terms of the digital economy stroke GST, I think that's where possibly the government will have to look for some form of a scheme support or the risk support to the institutions. And that's where the granularity of the portfolio across length and breadth of the country is what is going to be the key ask there. Second, I think also in terms of the possibly the reverse element will have to be looked at is also the cost of approaching these customers and cost of doing business, right? Because the ticket sizes will be small. So it's important that the effort on the digitization has to be accelerated in terms of a lot of data availability from various players. So while largely you will see the couple of government entities do have the data availability, but I would still say the ability for the underwriter in the alternate form of data could be the data of utility bills, which could be power consumption, the data of the telecom, which is in terms of the ability of the customer to pay, how long he has been keeping that mobile on, GPS triangulation. I think there are a lot of form of algorithm which can evolve, and hence the access to some of these additional data points will make it easier in the absence of the GST or ITR data or the balance sheet to be able to take a call on a lot of these small and marginal consumers. And I think that's the key ask from a digital perspective, which brings down the cost of doing business for the institutions, and hence the makes the access much more easier for institution to reach out to them and do the businesses.
Amitabh, we spoke about innovative platforms that can be there and reaching out to more and more customers. What about the products itself? What could be the new innovation that can actually meet very, very specific and very deep requirements of each small businesses?
Yeah, as I said, the SMEs have to be approached en masse, that is in bulk, because of the obvious reason that they are huge in numbers. So there's a thought within the government also and within the insurance companies also, whether we can give them parametric cover. Now, see, the maximum losses to any sector or any type of industry or any type of business takes place mostly due to natural catastrophe perils, which we call nat cat perils, like flood, earthquake, these kind of, or inundation, these kind of things. So now for small enterprises, following a law, supposing in a city like Mumbai, if you are covering maybe 1 lakh entities, it's really difficult to access all these 1 lakh entities following an event and try to assess this loss. So what government is trying to do to some extent, and what insurance companies are also thinking, is to provide parametric cover, that is an index based cover, similar to the agri cover which is prevalent in our country, that if the rainfall is above such limit, for example in Mumbai, in fact, every time there's a heavy rain followed by high tide, there's a water logging within the city, because of which a lot of businesses get affected. So if we can parameterize that, if, okay, this is the level of tide, this is the level of rainfall, if they strike together, then automatically the insurance companies will pay to the customers such and such fixed amount. So this is known as a parametric cover. There's a hard thing which is going on, how we can cover huge numbers of SMEs by way of parametric cover. I think that can be one game changer and an innovative product. And I think it will happen sooner in India than later, because a lot of thought is going into it.
So it's not available yet?
As of now, no, as of now, it's not there. As of now, it's not there. It is there in some other sector, but not in SME.
So I mean, insurance companies can work it out, right? Or does it?
Yeah, insurance companies can also work it out. But again, the challenge remains, insurance companies should be able to access a large number of such risks to be enabled to make it viable. If we get a small chunk of businesses and if it gets hit, then it will be, insurance company will not be able to take the hit. That is why we need a maybe the government support, or maybe popularizing by government, supported by insurance companies. And I think that's the way we should go about it.
Dhawan, what are the collaboration gaps between insurers and channel partners or banks or financial institutions? Where can we collaborate more going forward?
So I wouldn't say gaps. I think this partnership has evolved more from a distribution perspective, that you are acquiring a customer, and hence sort of insurance gets embedded as part of the business model. But right from, I think I would say most of the underwriting is actually common, right? The way I look at the risk, or the insurance company will look at the risk, I think 60-70% of the problem statements are common in terms of underwriting practices. It's just that we have not looked at it from a co-origination perspective, that how do we build a product combined between the insurance as an entity, insurance entities, and the banking as an entity. I see a scope for innovation here in terms of a cohort between the industries, looking at the shared underwriting capabilities, sharing the risk and the rewards thereof. And I think that's an area where possibly the scope to create a bundled product and create a large pool factor, which sort of makes the businesses and the risk management both viable on each other's side. So I think there is a merit to look at a co-origination of a product there.
Amitabh, do you agree with that assessment? I'm not trying to pit you against one another, but are you willing to share that kind of platforms with banks?
Yes, I think we have to work together, be it financial sector, be it government sector, all have to come together to create awareness, to give newer solutions, to understand the needs of the customer, to standardize processes, and in order to make it easier for customer to access insurance, and also side by side build some confidence that insurance is to help them. It is not just that it's a necessity to be taken along with finance, but ultimately it is something which maintains continuity of business, and that is what is important for financial institutions as well as insurance companies, to see that the business survives the biggest of the eventualities which they can incur.
We are moving to the last segment of our conversation for today. One by one, Amitabh, first with you. Are there any examples that you could provide, or any case studies that you can share with our audience, which can tell some success stories where a small business used insurance products and it helped them in any way?
Yeah, I think there's a plethora of examples. When I was in my earlier part of career, I was working in an operational office. I had insured one chemical factory. So it was a SME sector factory. Sum insured was about 1.5 crores. It was using solvents as chemicals. There was a heavy fire, and the fire was so severe. Of course, the factory got damaged to the extent that the roof of the factory also caved in because of the heat. So it was a very huge loss. The probably the premium that he would have paid at that time maybe would have been some maybe 20,000 rupees, 25,000 rupees, and the claim was over 1 crore. So the for the next 5 years till I was in that same tenure, the person continued to insure with us, and he said, "Ki, okay, whatever premium you charge, since you have helped me out in my times of distress, I'll also continue to insure with you, even if you slightly increase the premium rate to recover your losses." So that was the kind of kinship and bondship which gets built across between the customers and the insurers. So there are plethora of such examples I think we can quote, whereby insurance companies have helped customers to stand up on their feet.
I want to stress that point once again. 1 crore of payout coming in lieu of only 25,000 rupees
Yeah,
of premium paid, right?
it was a chemical factory using solvents, which is a hazardous chemical, and there was a fire probably due to some short circuit. And once a solvent catches fire, it is very difficult to extinguish it, even with the help of fire extinguishers. So the entire stock got burned. The building was severely damaged, but I think once we were able to get all the documents, immediately we settled the claim in toto.
Dhawan, any examples from your side which are not pertaining to disaster, but rather than sustainability and growth of the companies where insurance and financing has come in handy?
So both, Shalin, in terms of the lot of customers covering the spectrum of the risk and not just the fire. So we are seeing cases where the key man risk getting covered because the promoters is at a certain age, or the second line of generation may not be in the same business lives, and there are sort of the impacts around it. And we have seen a lot of these getting survived because of the employee benefit schemes, because it was impacting some of the key management players in the institutions, or the promoters getting covered on the key man risk. Especially in the global scenario, we have seen people covering the payment default risk under the factoring and the credit insurance model. So we are seeing a certain level of awareness going up in certain matured level of industries where they do understand the risk in each of these businesses. And I think we are seeing an increasing awareness and the willingness to sort of cover it adequately so that the risks are mitigated when the adverse situation happens. Right. So while a low probability is how you always assume, but it takes just one instance to sort of the whole business model go bust, right? And that's where we are seeing that a lot of people are availing the spectrum of risk practices to be able to sustain and grow the business model from there on.
A lot of work still to be done, as we have found out in our discussion today. 70% of small businesses outside formal channel of finance, and 90% of small businesses outside the ambit of any insurance, as Amitabh mentioned.
Insurance.
We'll wrap it up for today. Thank you, both of you gentlemen, for joining us at Reliance Children Insurance webinar for MSMEs with you for you. I'm Shalin Agrawal, Amitabh from Reliance Children Insurance, and Dhawan from Yes Bank. Thank you so much for joining us.
Thank you, Shalin. Thank you so much. It has been nice talking to you.
Thank you, Shalin. Thank you, Amitabh.